Look at it. It is perfect. The paint looks like liquid wealth. The chrome shines like a promise. It smells like success. This is what they sell you in the commercials. A dream of freedom. A machine that proves you made it. It is beautiful. It is seductive. And it is the most dangerous object in your financial life. Now, look at the reality. The showroom lights are gone. The smiling salesman is sleeping soundly in his bed. But you are awake. You are sitting at your kitchen table. The house is quiet, but your mind is loud. You are looking at the bill. You are doing the math, and the math does not add up. You feel a tightness in your chest. That is not just anxiety. That is your instinct telling you something is wrong. You worked for 40 years. You saved. You planned. You were told that retirement would be the golden years. So why does it feel like you are drowning? Why does the money run out before the month does? The industry calls it the new car smell. I call it an intoxicant. It is a chemical designed to mask the scent of burning capital. It works. You walk into the showroom feeling like a king. You drive off the lot, and 3 years later, you realize you are a serf. You're working for the car. The car is not working for you. Turn on the news. They tell you inflation is cooling. They tell you the economy is strong. They show you charts of the stock market. But they don't see your bank account. They don't see the check you just wrote. They are lying to you. Not by what they say, but by what they leave out. Your financial advisor is part of the problem. He looks at your portfolio. He looks at your healthcare costs. He looks at your grocery bill. He nods and says, "You are fine." But he isn't looking at your driveway. That is where the leak is. You have a hole in your pocket the size of a luxury SUV, and nobody is talking about it. Let's look at the numbers. In the 1990s, $800 was a mortgage payment on a nice house. It was an asset. It grew in value. Today, $800 is the average monthly payment for a new vehicle. Think about that. You are paying a mortgage payment for a depreciating metal box that loses value every time the wheels turn. This is not an accident. This is not just inflation. It is a re-engineering of ownership. The goal of the modern automotive complex is not to sell you a car. They don't care about the metal. They want to sell you the loan. The car is just the bait. The loan is the hook. They have changed the rules. They don't want you to hold a title in your hand ever again. They want you on a permanent subscription plan for transportation. They want to ensure that from the day you retire until the day you die, you are sending a monthly check to a bank. You think you bought a vehicle. The bank knows you bought a liability that depreciates faster than you can pay for it. You might think this is just how the world works now. But it isn't natural. It was designed. They built this trap exactly 40 years ago. And tonight, I am going to show you the blueprints. Go back in your mind. Think about how it used to be. The year is 1965. You wanted a new car. You didn't walk into a dealership empty-handed. You saved. You put money in a jar. You waited. When you walked onto the lot, you had power. You negotiated the price, not the payment. Back then, a car loan was rare. If you had one, it was short, maybe 24 months. And the day you made that last payment, it was a holiday. You owned it. The bank was out of your life. You drove that car for 5-10 years without owing a dime to anyone. That was the before world, a world of finite transactions. Then the ground shifted beneath our feet. The early 1980s. I was there. Interest rates exploded. They hit 18%. Nobody could afford to borrow money. The dealerships went silent. The factories stopped humming. The auto giants were staring at bankruptcy. They needed a miracle. Or they needed a trick. The manufacturers realized they had a problem. The cars were too expensive for the average worker to buy with cash. And with high interest rates, nobody could afford a loan. So they made a decision that changed your retirement forever. They decided to stop selling cars. They started selling debt. This was the birth of captive financing. The car companies, Ford, GM, Chrysler, became banks. They realized the profit wasn't in the steel or the engine. The profit was in the paper. The car became the excuse to get you to sign the contract. The manufacturing division became a servant to the lending division. They built a Trojan horse. It was shiny. It smelled new. It looked like the American dream. But inside, it was a trap. They called this trap the monthly payment. Before 1980, the first question was, how much does the car cost? After 1980, the question became, how much can you afford per month? It was a brilliant sleight of hand. If they focused your eyes on the monthly payment, they could hide the total price. They could raise the price of the car by thousands. But if they extended the loan by just 6 months, your payment stayed the same. You thought you were getting a deal. You were actually getting handcuffs. They stopped building cars for drivers. They started building loan structures for investors. The vehicle in your driveway became merely the collateral for a securitized asset sold on Wall Street. You became a steady stream of cash flow. You ceased to be a customer. You became a yield source. This system worked perfectly for 40 years. It trained you to ignore the total cost. It trained you to accept a car payment as a life sentence, just like a utility bill or taxes. They made you believe that owning a car meant renting it from the bank until it fell apart. But shifting the focus to monthly payments wasn't enough to trap you completely. You might still pay it off. To keep you paying forever, to ensure you never hold the title, they had to break the laws of mathematics. And they did it with a specific tool I call the 84-month illusion. Look closely at the paperwork. They used to be 36 months, then 48. Now the standard is 72 or 84 months, 7 years. That is a lifetime for a machine. They tell you this is for affordability. They say it keeps your monthly payment low. Do not believe them. It is not designed to help you buy a car. It is designed to keep you in debt. Here's the trick. A car is not a house. A house goes up in value. A car rots. It is a depreciating asset. When you sign a 7-year loan, you're agreeing to pay interest on something that is losing value every single day. You are paying for a ghost. By year 6, you are making payments on a car that is barely worth the tires it sits on. Imagine a bucket. This bucket represents the value of your car. There is a hole in the bottom. That hole is called depreciation. As soon as you drive off the lot, the value drains out. Now, imagine a faucet filling the bucket. That is your monthly payment. In a short loan, the faucet flows fast. You fill the bucket, you own the car. But with an 84-month loan, the faucet is just a trickle. The value drains out of the hole faster than you can put money in. You are always empty. You are always behind. You are underwater from the moment you sign your name. You think you are driving alone? You aren't. There's a silent partner in the back seat. The banker. He owns more of the car than you do. For the first 5 years of that loan, if you try to sell the car, you have to write a check to the bank just to get rid of it. You are trapped in the metal. This brings us to the kill zone. The average American gets bored of their car after 4 years. Maybe the warranty runs out. Maybe you just want something new. But remember, you signed a 7-year loan. You still owe 3 years of payments. You owe $15,000, but the car is only worth $10,000. You go to the dealership. You tell them you want to trade it in? The salesman smiles. He says, "No problem. We will pay off your old loan." He acts like he is doing you a favor. He is not. He is burying you. He takes that $5,000 you still owe, and he adds it to the price of the new car. This is called the rollover. Now, your new loan is for the new car, plus the ghost of the old car. You are paying interest on a vehicle you no longer own. You are paying for a memory. Do this twice, and you are finished. It is a snowball, but it is not the kind of snowball you use to pay down debt. It is a snowball of negative equity rolling downhill. It gets bigger. It gets faster. Eventually, You owe $50,000 for a car worth $20,000. This is how they crush your retirement cash flow. Most of you are sitting there thinking, I'm too smart for that. I have good credit. I have an 800 score. You think that protects you? It doesn't. Your good credit is exactly why they targeted you for the next phase. They have a special trap for the responsible ones. You think this is just about interest rates. It isn't. It is about fear. Look at the dashboard of a modern car. It looks like a cockpit. It flashes. It beeps. It warns you. This technology is not just for driving. It is a marketing tool designed to make you feel old. They use your survival instinct against you. The salesman asks, don't you want the automatic braking? For the grandkids? He implies that your 5-year-old car is unsafe. He implies that without these sensors, you are a danger on the road. He is gaslighting you. He is selling you confidence, but he is charging you a fortune for it. A car used to be metal and rubber. You could fix it with a wrench. Now it is a computer on wheels. It has 50 sensors. It has 5 cameras. It has a brain. And like all computers, it is designed to crash. Metal lasts for decades. Touchscreens do not. When that screen goes black, and it will right after the warranty ends, the car won't start. You can't just change a fuse. You have to replace the module. The dealer hands you a bill for $3,000 just for a piece of glass and a microchip. This is the moment they catch you. They know you are on a fixed income. They know you cannot handle a surprise $3,000 bill. It scares you. It threatens your grocery money. It threatens your sleep. So they offer you a solution, a new lease, a new loan. $600 a month, they say. No surprises. Full warranty. They weaponize your need for predictability. They know you fear a large repair bill more than you fear a monthly payment. You sign the paper. You think you bought safety. You actually bought a subscription. You are paying $7,000 a year in payments just to avoid a potential $3,000 repair. You are paying double for your fear. You are paying an insurance premium to a bank, but you call it a car payment. Do not feel stupid. You are not bad with money. You are fighting an army of psychologists and data scientists. They know exactly when your warranty expires. They know exactly how much anxiety you can handle before you fold. It is an algorithm designed to extract yield from your fear. They want you to believe that owning a car without a payment is dangerous. They want you to believe that debt is safety. They have trained you to rent your life. You are trapped in a cycle of perpetual leasing, disguised as ownership. But there is a way out. It requires you to do something the bank prays you never figure out. The trap is built on fear. The escape is built on math. You do not need a miracle to beat them. You just need a new set of rules. The bank has a plan for your money. Now, you need a counterattack. Step 1 is the repair fund. You are afraid of a $3,000 repair bill. I get that. But do not pay a bank $600 a month for peace of mind. That is $7,200 a year. Instead, open a savings account. Put $300 a month into it. Be your own warranty company. If the car breaks, you have the cash. You write the check, you smile. If the car does not break, you keep the money. It stays in your family. It does not go to a CEO's bonus. You turn a fear of loss into a guarantee of wealth. Step 2. The depreciation sweet spot. Never buy new. Let the first owner take the hit. As soon as a new car leaves the lot, it loses thousands. Let someone else pay that stupidity tax. You buy it when it is 3 or 4 years old. It still looks new. It still smells fine. But the steepest drop in value is already over. You are buying the utility of the machine, not the marketing hype of the manufacturer. You are buying transportation, not an ego boost. Step 3. The 10-year rule. This is the hardest part. You must commit to keeping a vehicle for a decade. The years 5 through 10 are the profit years. This is when you have no payments. This is where you regain the wealth the system tried to steal from you. You have to change how you see the machine. Stop viewing the car as a status symbol. Stop viewing it as an extension of your identity or your success. It is a utility. It is a tool. It is a washing machine that goes 60 miles per hour. Does your washing machine need to be sexy? Does it need leather seats? No. It just needs to work. When you stop trying to impress strangers at a stoplight, you start building real security for your future. They want you to rent your life. They want you on a subscription plan for existence. They want every object in your world to have a monthly fee attached to it. Ownership is the only rebellion left. Keep your title. Keep your capital. Starve the beast. The car payment is just one trap. The housing market is next. They have a plan for your home equity too. Subscribe, and I'll show you the blueprints they don't want you to see. Disclaimer. The content presented in this video is for educational and entertainment purposes only. The architect is a fictional character. This information does not constitute financial, legal, or investment advice. Individual financial situations vary. Please consult with a qualified financial advisor or professional before making any financial decisions regarding vehicle purchases, loans, or investments. The creators of this content are not responsible for any financial losses or damages resulting from the use of this information.